What's up, guys? Welcome to the Momentum Trading Lab. My name is Renier. I'm a professional funded trader, and in today's video, I'm going to unravel one of my favorite trading strategies, the Inversion Fair Value Gap entry model. In this video, I'll share a couple of examples and also my personal entry checklist. Trust me, you don't want to miss this. And with that being said, let's get into it. Okay, before we get into the actual trading strategy, let's discuss what an inversion fair value gap is. So in this graphical representation, we have a bullish fair value gap, also known as a busy, a buy-side imbalance, sell-side inefficiency fair value gap. So an inversion fair value gap is whenever price action trades through it and closes candles below the fair value gap. At that point, this becomes an inversion fair value gap. And if we get price action to trade back into this fair value gap, then we can frame a trade entry based off this level. Now, in the next example, we have a bearish fair value gap, also known as a SIBI, or a sell-side imbalance, buy-side inefficiency. So if price action trades above the fair value gap and closes candles above the fair value gap, then this becomes a inversion fair value gap, and we can consider an entry if price action trades back into this fair value gap. Okay, so this part is extremely important. So when do we look for this model to form? We look for this model to form once price is traded into a level of liquidity. So that will be the very first step that we look for before we even consider entering an inversion fair value gap. Okay, so how do we find the actual liquidity pools? Now, I did recently do a video on these liquidity pools. I'll pin it to the corner of this video. So we look for this model to form once price has traded into the New York AM high or low, the New York PM high or low, the London session high or low, the Asian session high or low, or the previous day high or low, or the previous week high or low. Now, in the upcoming examples, I will show you how to find these different levels. Okay, and this is my personal entry checklist that I use for this entry model. So first of all, this is the very first thing that must happen is the rate on liquidity. So you can refer to the previous page. These are the liquidity levels. So once price trades into the liquidity, then we can look for inversion fair value gap to form. The next item on the checklist is that we must be inside of a kill zone, and more specifically the New York or the London kill zone. I don't personally like trading the Asian session. And then next up, once those conditions are met, then we can look for inversion fair value gap on either the 1 minute, the 4 minute, the 3 minute, the 2 minute time frame to form. And then we target an opposing liquidity pool or an opposing PD array. And then considering those levels, it must give us a 2-to-1 risk to reward ratio. And then we are always aware of red folder news. So me personally, I like trading on days that have the red folder news. It gives a lot of volatility and it injects a lot of liquidity. So personally, I'll just let the news play out, and then I will normally look for an entry during the silver bullet time windows. Okay, so let's have a look at a graphical representation of this entry model. We can see that price traded into the level of liquidity. We are assuming for this example that we are in a kill zone. So we have the rate on liquidity. We have a busy fair value gap. So now we are expecting this fair value gap to fail because it traded into the buy side liquidity. Price action trades through the inversion fair value gap. So now we have the potential of an entry model to form. Now we look at the opposing liquidity pools or a opposing PD array, for instance, an opposing fair value gap or a bullish order block for our take profit area. So if it is from our entry point to the opposing liquidity pool, a 2-to-1 risk to reward ratio, then we have a valid entry model. And if price trades back into the inversion fair value gap, then we can enter. So we enter right at the beginning of the fair value gap with our stop loss at the high, and the TP will be the opposing liquidity pool or opposing PD array. And then ideally price action will run straight into your target. All right, let's have a look at a couple of examples. Okay, so for this example, we have these relative equal highs right here. And we also have the previous day high right there. So if we just have a quick look at the price action, we can see that we had this bearish market structure that traded into this busy fair value gap. Then we started to get the move to the upside. So it's kind of telling us that it wants to gravitate towards the buy side liquidity above these highs. And then also we have the New York morning session high right here. So we want to mark that off as well. Okay, so we have the New York AM high here as well. And as you can see, we've not traded through it yet. So we have another set of relative equal highs right here. So this is strong buy side liquidity building up in this area. So let's see how this plays out. If we can trade in there and there's a bullish fair value gap in that area that fails, then we can use that for our trade entry. Okay, so on a lower term time frame, this is the 2-minute. We have the liquidity pools right there, the previous day's high and the New York AM session high. Let's see how this plays out. All right, so we traded into the New York AM session high and we also purged the liquidity above the previous day's high. So let's see if there's a bullish fair value gap. So we have this one right here. So let's see if we can get a candle close below this. And then we have a valid inversion fair value gap. And if price action comes back into this block, then we can take a trade entry. Okay, so we came out, we closed candles below it. You would have entered right there with your stop at the high. All right, so let's look to the left and see if there's any potential PD arrays that we can use for our TP. So if we just go to the left, there's another inversion fair value gap right there. So I'll put my focus on that. So we normally target the low hanging fruit. So let's see if that's a 2-to-1 risk to reward ratio. It is about 2.1. Okay, so let's see if we can get price action to trade into our TP level. And right there, took you out of the trade with profit. I just want to quickly take this time to tell you guys about our free Discord server. So if you want to stay up to date with my analysis during the week, this is the best way to do so. So we have the Renier official channel with all of my analysis. We also have Illuminated Nothing. He does regular Bitcoin updates. We have the general chat area where you can chat to other traders. We have the community trading floor. And then we also have the Momentum Trading Lab trading school where you can get all of the educational content. All right, back to the example. Okay, in this example, we are on the 1-minute chart. We had this nice drop to the downside. And if we look to the left, this piece of price action was a London session from 2 o'clock until 5 o'clock New York time. So if we take the lowest low that was printed in this time window, it was this low right here. So let's extend this. Okay, so now we can see the London low for this piece of price action. And we can already see that there's a bit of a imbalance right there. So if we can get price action to trade into the London low and then flip this sub fair value gap into an inversion fair value gap, then we can potentially use that level for an entry. And then we have some nice relative equal highs right here for a potential TP target. Let's see how this plays out. Okay, so we tapped into that London low liquidity, starting to break through the sub fair value gap. Okay, so we had the candle close right above it. There was another one that closed up right above it. Then this down close candle tapped into the fair value gap and then started to move away. So that would have been your entry right there with your stop loss at the low. And then let's see if we can get a 2-to-1 risk to reward ratio to those relative equal highs right there. So that will be our opposing liquidity pool. All right, let's see how this plays out. Got a nice little move to the upside, bit of consolidation. Getting close to the target now. And right there, tapped into the buy side liquidity right there. Okay, I'm going to quickly show you how to identify the previous day high and low. So you simply go to the daily chart. This candle is today's candle. So you go one candle to the left and then you can use the horizontal ray tool and you can switch on the magnet and then you simply snap it to the previous candle's high and you snap another one to the previous candle's low. Then you have the previous day's high and the previous day's low. Okay, so previous day high and the previous day low, and you can do exactly the same on the weekly as well. You go to the weekly time frame. This is the current weekly candle that we are trading in right now. So go one candle to the left, take your horizontal array, snap it one to the high and snap one to the low. Then you have the previous week's high and the previous week's low. Thank you guys for watching this video. If this video provided you with any value, please consider hitting that like and subscribe, and I'll see you guys in the next one.